As we discussed in the video on paying taxes quarterly, when you're self-employed, you have to pay the full payroll tax since there is no employer to split it with. Usually, when working for a company, there is a 15.3% tax owed from each paycheck. Of this 15.3% total payroll tax, 12.4% goes to Social Security and 2.9% goes to Medicare. The 12.4% Social Security tax only applies to the first $142,800 of income. As a self-employed worker, there is no employer to split the 15.3% with, so you're responsible for paying the full amount. However, the government does let you deduct the 7.65% employer portion that you had to pay from your income taxes. Let's go over an example of how this works. Let's say that you had $100,000 of self-employment income on your Schedule C. When figuring out the self-employment tax that you owe on your Form SE, you get to reduce your self-employment income by half of the self-employment tax rate. So in our example, that means $100,000 minus $100,000 times 7.65% equals $92,350. Then you apply the 15.3% tax to the $92,350 and you'd owe self-employment tax of $14,129.55. The $14,129.55 you owe in self-employment taxes would then go to the other taxes section of your Form 1040. This is the calculation of your self-employment tax. However, you still have to pay income taxes, and so there is another deduction we get for that. You can claim 50% of what you paid as self-employment tax as an adjustment to income on Schedule 1 Part 2. You'll see this deduction on line 13 of Form SE, and it will flow through to the Form 1040 via Schedule 1. So our $14,129.55 times 50% equals a $7,064.78 deduction to our adjusted gross income and reduces what you have to pay income taxes on. Note that if your income is above $142,800, the self-employment tax will actually be lower on every dollar you earn above that threshold. This is because the Medicare tax applies to all income, but the 12.4% Social Security tax is only on the first $142,800 of income.